I will let you know what Indiana allows you to have for tax deductions on property. It allows you to deduct these things if you install them into your property. 100% of the assessed value of the structure and foundation of the heritage barn you can actually deduct. Welcome back to our channel, Living on the Ohio River. Hi, I'm Carrie Henshaw with Key Associates Signature Realty. If you're new to our channel, tap that subscribe button. And if you've been watching, well, welcome back and thank you, and give me some more thumbs up. And if you are relocating to this area, make sure you look in the description. We have a great relocation guide for the area that can help you with the move. So as always, I am a local realtor. As much as I love to do these videos, I do sell real estate. So if you are moving, please reach out to me. Our team and myself would be happy to help you in that moving process. So I'm going to do a topic today that a lot of people may wonder, because all states are different. What is Indiana property tax deductions? And when you go to a closing, you get this nifty little yellow paper. And sometimes after the closing, it may be late information for you. And so if you're planning this move and wondering what your tax deductions are in the state of Indiana, I'm gonna kind of go through them. I'm gonna have to do some reading because there's a lot of detail here. But you're usually getting this yellow paper in the closing. So let's go through it, and I will let you know what Indiana allows you to have for tax deductions on property. So the first one is the homestead deduction. This is actually when you live in the property at your primary home. For example, if you have an investment property, a second home, you would not be able to qualify for this actual deduction. The deduction itself is the lesser of 60% of the assessed value of the eligible property, or $48,000. So those two figures would allow you to deduct off the assessed value of what your property is assessed at. So it helps you reduce your taxes from that perspective. The next one, again, I'm going to be reading a little bit because there's a lot of information here. The Supplemental Homestead Deduction. This is equal to the sum of the following: 35% of homestead assessed value after the standard deduction, which is the first one, has been applied that is less than $600,000. 25% of the homestead assessed value after the standard deduction has been applied that is more than $600,000. So this is breaking it up depending on the value of your home. Everybody gets the homestead for the first one. The second one then gives you a different amount on the supplemental based off the value of what your home is worth. So you get 35% if you're under 600,000, and you get 25% if you're over 600,000. So now we move on to all of that wonderful solar energy and solar power devices and wind power devices, hydroelectrical power devices, geothermal devices, all those good things for our earth, right? We do get some deductions for those. So let me give you what they say for the amount you get. The solar energy equals the out-of-pocket expenditures for the components and the labor involved in installing those components. So you can deduct those off. For solar power, wind, hydroelectric, and geothermal, assessed value of the property with the device less the assessed value of the property without the device. So that's kind of basically the value of what it would cost to implement it. And then the solar power device is assessed or distributed by personal property. It's basically the assessed value of the device. So if you have any of that good stuff, you're one of those people that want to get off not to get off the grid, but a little bit, it allows you to deduct these things if you install them into your property. This is a fun one, and I love it. Heritage barn. This is actually 100% of the assessed value of the structure and foundation of the heritage barn you can actually deduct. And it's available for only Mortise and Tenon barn. I'm not sure if I'm even pronouncing that right. That on the assessment date was constructed before 1950 and retains sufficient integrity of design, materials, and construction to clearly identify the building as a barn. So they're actually, preserving old barns and giving you that deduction for it, which I think is really cool. I think it's like a ton and groove, if I remember correctly. I don't even know if I pronounced it right, but how older barns were constructed back in the day. So that is kind of a neat little deduction that you may have not known about. Next one, are you over 65? There is a deduction for people over 65. The lesser of 1/2 of the assessed value of the property, or $14,000. There are a few things that we need to go over for over 65. For the calendar year preceding by 2 years, the calendar year in which the property taxes are first due and payable, the adjusted gross income of an individual who filed a single return does not exceed $30,000. An individual who filed a joint return does not exceed $40,000. An individual and all other individuals that share ownership as joint tenants or tenants in common does not exceed $40,000. So you may be over 65, but you might make too much money. So I wanted to point that out. There's a lot of other things. I guess there's another item that's pretty important. Assessed value of the property does not exceed $240,000. So these two items, basically age and the value of the home, do matter if you're over 65. If you're over 65 and do not qualify for those two items, then you will not be able to get this deduction. Over 65 circuit breaker credit. This is very similar again to the it prevents property tax liability on qualified homestead property from increasing by more than 2% over the previous year's tax liability. And these have the same thing. It's about gross income as well. So it's not much different, but a little bit different in regards to the value of the home itself. Fertilizer and pesticide storage. The applicant must file an e-certification by the state chemist listing the improvements that were made to comply with the fertilizing storage rules adopted under IC 15-6-2-44 and the pesticide storage rules adopted by the state chemist under IC 15-6-4-52. So I honestly do not understand this one. So if you are in the world of fertilizing pesticide storage, you might understand that. So on we go, there's still more. So now we are on the blind or disabled. This is a deduction of $12,480. This one's pretty self-explanatory. The only restriction is applicant's taxable gross income does not exceed $17,000 in the year prior to the year the deduction is claimed. Another one is totally disabled veteran or veteran at least 62 with disability of 10% or more. This is $14,000 as a deduction if you are a veteran out there. So definitely look into that. Again, you have to be totally disabled or at least 62 with at least 10% disability to get this. The next one is deduction for homestead donated to a veteran. So this varies based on the amount of veteran's disability, at least 50% and up to 100% of the assessed value of the homestead. So this is when basically you receive honorable discharge, have a disability at least 50%, and the homestead was conveyed without charge to the individual or the owner. So if someone actually gave you this home, you still can claim that homestead. Or I should say not homestead, but that tax deduction. Now we are at veteran with service-connected disability. This is $24,960. And the applicant has service-connected disability of at least 10%. You've received an honorable discharge from the U.S. military or naval services during the wars. And there are also some options for surviving spouses. So look into those details a little bit as well. And the last one is surviving spouse of a World War I veteran. This one's $18,720. This is basically an applicant is surviving spouse of a person who served in the U.S. military before November 12, 1918. So let's say someone served in, husband or wife, and they passed away. If they meet that requirement, you actually get this deduction as well. So lots of deductions for the state of Indiana. If you are looking to move, those are the ones that you can claim to get your taxes down. The little yellow paper is what you'll always see that you'll have to sign off in closing. So I hope this was beneficial for your research if you're looking to move to Indiana. And again, if you need anything, reach out. You can call me at 812-686-3268. Have a great day. See you next time.
We open doors in realty. Key Associates. Key Associates.